It's time for wrapping up the show for today and for the week. Begin from the beginning. This is the wrap of the live market open for Friday, October 23rd. We had lots of action thanks to Mario Draghi, the president of the ECB. He not only opened the door for extending QE to September 2016, but also for printing more money than 60 billion a month that is currently going. Even more significantly for the euro, he opened the door to cutting the deposit rate, changing the policy of the ECB that said rates have reached their lower bound. So these expectations for the future, of course, make things bad for the euro. He also used the word vigilance. Okay, so the ECB did not act yesterday, but Draghi did hint about more action. And more importantly, he used the word vigilance, which in the past used to mean imminent action. Bearing any disaster, will have a significant move from the ECB on December 3rd, and that's why the euro collapsed. And the reasoning for this is that they're worried about inflation and they're worried that oil will reach other sectors in terms of falling prices, and that the exchange rate, they said it out loud, it really worries them. So euro dollar, of course, a huge fall here on the charts. We had it, well, that's a crash, 2%, which is huge in currency markets, falling all the way from above 113 to the lows of 110.70, now stabilizing. Most important thing to watch is the close. If we have some kind of recovery like we had in September, that'll mean we're still in range, perhaps even going higher. Perhaps the market is going to fade this move, think, well, the Fed isn't going to move either, okay? But this time could be different because Draghi shut all his verbal tools, and perhaps this time I would watch the close of 111. If we have a close under that level, if we have the pair closing at the lows and not recovering too much, it would imply for me more falls in euro dollar. Elsewhere, we had good figures from the US, better than expected. Jobless claims, better than expected existing home sales that helped the dollar. We had other currency pairs such as pound dollar and dollar yen getting a bit carried away and now getting back to normal. So pound dollar dropped a bit under support 154, but stopped at 153.70, currently grinding back into range. Dollar yen went all the way up to 121 and now back towards the level that it really loves and hugs, 120. Commodity currencies did gain from the move because more money printing, doesn't matter if it comes from Europe or the US, is good for commodities and commodity prices. And for stocks, of course, we've seen rallies. So dollar CAD is improving, reversing the losses seen after the Bank of Canada cut growth forecasts. Kiwi also inverse head and shoulders, currently 68.80. The wide range is 69 to 67. Okay, Aussie dollar, which already dropped below 72, is now back to the battleground of 72.80. And dollar Swiss, of course, it raged higher. I think that the Swiss National Bank is intervening to keep the Swiss franc in line with the euro. That means a weaker Swiss franc. Okay, so today we're expecting look out for the close, and there's also Canadian CPI that impacts the Canadian dollar. Core CPI is of course more important, and US flash manufacturing PMI, and of course echoes from Mario Draghi.